Okay, yeah. So, hello everybody. Good morning, good afternoon, good good evening, uh, depending of your side in the globe. So, I'm going to present my our paper, our work called "Blockchain Application in Cyber Liability Insurance." Um, so, it is um, a brief study regarding up, one application in cyber liability insurance. I will call in a band. I will call as now CLI. Okay. So, uh, as we maybe know, blockchain is a technology capable of tracking data in a decentralized, transparent, and secure fashion. So, one specific fact, more than 80% of Fortune 100 companies have some form of blockchain initiative in place, including these industries: financial services, supply chains and logistics, healthcare, real estate, and reinsurance or insurance. Sorry. So we can see this topic is important, and we can see how the companies are uh, implementing this kind of technology inside their process. So the escalation of cyber threats, in other hand, has amplified the demand of this form of insurance, and this market projection has a valuation of around $60 billion by 2032. Okay, so in less than 10 years. So CLI provides a critical coverage against financial losses stemming from cyber incidents, including data breaches, ransomware attacks, and other forms of cyber crimes. That is there are many ways of cybercrime. However, now we have a traditional insurance industries, uh, and we need to face with the changes regarding underwriting, risk assessment, and claim management in this domain. So, considering the inherent immutability of blockchain, which ensures that data records remains tamper-proof, and considering the data security and integrity, we try to match this technology in order to have a better scenario with a claim. Sorry, with insurance, claim insurance. So blockchain technology is revolutionizing CLI by addressing key challenges in, as I say, underwriting, risk assessment, and claims management. So now this study explored the potential of this technology to enhance the accuracy of risk assessment, streamline claims processing, and enable decentralized insurance platforms. So, what is the objective of this work? To explore the integration of blockchain technology in CLI to mitigate risk, improve risk assessment, and enhance the efficiency of claim management. So, we need to define the concept of a smart contract, as we maybe know, is a self-executing program that automates the actions required in a blockchain transactions. So with the claim insurance, we need to process a document or many files considering data. So in this part, the smart contract takes part. Okay, so what is our methodology? So we can see this diagram uh, outlining the key steps in the proposed smart contracts process for this process. Okay, uh, uh, starting with cyber incident report and after to blockchain-based claim verification. So the model or the proposals consider that the data, the actual or the current data. So the smart contract automatically verifies the claim by cross-referencing the incident detail with historical data stored on the blockchain. Uh, this ensures accuracy and validates key elements such as the nature of the cyber attack and the policyholders' adherence to predefined security protocols. After we have a decision here. So if a valid claim, so if the claims meet the predefined criteria, the smart contract proceeds to approve the payouts automatically. Otherwise, if the claim doesn't fulfill the necessary condition, it is rejected. This automation significantly reduces manual intervention, speeding the claim process and saving money. That is the most important part. And after we have one condition, it is if we have a proof payout, so maybe we need a manual review as required, right? So it depends. I will show this scenario, and at the end we have a smart contract that will be transformed into a blog and will be inside or will be connected to the next or to the change as the next block. Okay, so a smart contract in CI claims processing, that was the methodology, and we run a proof of concept. Okay, and that in this example we use a random forest classification. Why? Because it's a very simple model, and we use a hyperparameters optimization to know what is the best model. So the model was trained using the insurance claims data available on Kaggle, so containing various features related to insurance policies, policyholder characteristics, and vehicle specifications. So we have here in this data set these key features: policy holder information, claim history, policy details, risk factors, and external factors. That external factor can influence claims likelihood, such, for example, economic indicators, weather conditions, and regulatory changes. So public regulatory changes. So the primary goal of this study was, or of the model, right, was to predict whether a claim will be made based on these features. Okay, so first we need to pre-process the data. As we know in machine learning, we pre-process the data. So we need first the top 10 feature importance in order to get ready to run the model. So we have some features, and the most important are subscription length, vehicle age, customer age, region density, and some region code. In total, we have around I forgot, but are around 40 features. And here we can see a distribution of the predicted claim probabilities. So we can see, for example, probability close to zero will be a claim rejected, and close to one um, will be a claim accepted. Okay, so we need to understand how the data or the behavior of the data in order to run the model, and having a knowledge or explanation about the results. So hyperparameter optimization was performed to improve the model accuracy and to know what is the best model. So we have had to consider numbers of estimator for the random forest: 50, 100, 200, and max depth, and known 10, 20, 30, a minimal sample split and leave, as we see here, and a bootstrap true or false. So the best model obtained was 200 estimators, non-max depth, five minimum sample split, and one minimum sample leaf, and without bootstrap. At the end, running the model, we got this performance precision of 89. Recall F1 score is, you can see, is is the same for every class, and the number of support, or the number of cases. So we got around almost 35,000 cases. So in general, our model got accuracy of 89. To be honest, we didn't care about the accuracy of the model, but about, because this is a proof of concept, we care about how the process was performed. So we got a very clear process and good solution. So let me show you the results. So the optimized random forest model achieved an accuracy of 89% with an area under curve of 0.96, indicating a strong discriminatory power between claims and no claims. So we can see the ROZ curve, and with area under curve of 96. So here we got a smart contract simulation. So the model was obtaining data from the blockchain, okay? And after the smart contract was released, or was executed. So in now, after training the model, so we can run the smart contract, or the simulation of the smart contract. So the smart contract efficiently categorized claims into automatic approvals, rejection, or manual review. So that these are the three decisions based on the predicted probabilities, demonstrating the potential for automation in CLI. So basically, here we can see we got, I am showing only 10 claims. So remember, we got around 36,000, 34,000, I guess, claims. And after, we got a claim probability for each. So here we can see a decision for each, based on all the features, and we can see, for example, the decision rejected due to high claim probability, approved automatically. The other end requires manual review. So how we made, or the models, or the smart contract actually made the decision. So claims with probability below 0.3 were approved automatically, while those above 0.7 were rejected. Okay. And we can see between 0.3 and 0.7 requires manual review, because the model is not very clear about what decisions will be made. So you can think, okay, so what happened is most of the claims are between this range. So that's why we understood our data, and we saw, we watched the claims are in the extremes, right? Or are in the extremes, so or too low or too high. So that's why the most of the claims will be rejected or approved automatically, and some of them, in some specific cases, will need, some requires a manual review. So the smart contract uses predefining threshold to automatically approve, reject, or flag claims for manual review based on this predicted probability for each claim. So specific with limitations, we need to understand or we need to think, and this is part of the future for the future research regarding to this study. So we need to think about scalability issues. Why? Because every time a claim is a decision is made, will be stored in the or will be added in the blockchain. So there is a scalability issue because what will happen in 10 years, for example, or not in terms of times, but in terms of files, okay, or claims. So integration with legacy system will be expensive, or the cost can increase with no sense because it's reviewing all or is checking all the previous data. So regulatory compliance, I wish I will explain later with with the other case, energy consumption. So we already know the consumptions in blockchains. So data immutability. So we need to understand what is a privacy concern with data because the data is stored. So what will happen when people wants to change the data or wants to um, hide some data? Pseudonymity against anonymity. So now some blockchains has anonymity, but we can use some ways or some techniques to track the origin and to know who is who is the owner of one specific part of information in the blockchains. Data access and control, and uh, compliance. Sorry, some words exchange, but here is compliance with data protection law. So this is very related with the regulatory compliance because what will happen when somebody, as I mentioned, when somebody wants to avoid or to hide some data, and will be a problem with the law for example, from Europe or from some specific region in the world. So in this case, for example, is a GDPR. I forgot, to be honest, what it stands for. Specific in Europe, general data something. Sorry, but is a framework, a law framework for control data access in Europe. So what will happen if the block, because the blockchain has immutability, right? So what will happen in that specific scenario? So conclusions, to finish, blockchain technology offers significant potential to transform the cyber liability insurance industry by enhancing transparency, security, and efficiency. The use of a smart contract can automate claims processing, reducing administrative costs, and building greater trust with customers. So we have claims reviews by people. People can get tired, but we have now claims considering all the data, but not only data, but only trusting data. So this improvement can make a significant impact in addressing the challenge faced by the industry today, and the industry who is experienced many challenges and facing many challenges, and is will be have will be very important in the actually it is now, but in the next 8 to 10 years will be facing many cyber threats, and with capital or market or money in a very important significance. Okay, so thank you very much. Let me know if you have some questions.